Don't look now, but the PSE is up more than 260 points in the first 4 days of the week. But resistance seems to be stubborn at the 7,300 level. Marvin Guillermo, StockSmart, joins us today to assess the local bourse's odds before we break for the weekend. And really, apart from Wednesday's flop, the PSE's been in good stead, actually, Marvin. 4 days in the green, generally resilient to all of that risk-off sentiment. I'm sure you saw what happened with stocks across Asia. For the most part, they've been resilient to that also. Your thoughts on why the PSE's been in such good spirits this week as compared to the sell-offs we've seen in the previous 2 months?
Okay. If you look at how markets move, it really just follows specific patterns, especially when we're looking at the index, somewhere around 6.8, as seen last October and then as seen a couple of days ago, it's perceived to be cheaper. A lot of investors are pegging that at 6.8, Ayala Land at 38, MPI at 4.3, SM Prime at around 31, 32, which are big components also of the PSEI. People are pegging that if I invest in them at this point, they're relatively cheaper. And somehow, some way, if there's something compelling in a couple of years later, they're already positioned at a much, I guess, better standing. So from a tech perspective, 6.8 is a support. What we saw over the past few days was basically a bounce from support because everyone was pegging that it's cheaper. The question for me is this: what will cause investors, what will cause traders to buy the markets at a relatively higher pace? What will cause them to buy later on when we hit 7.3, 7.4, 7.5? That's why there's a bit of hesitation there, because there's a different story when people are buying it lower as compared to there's something compelling for them to buy it higher, which is something we don't have yet.
What do you think is going to compel people to buy once they hit that stubborn 7,300 resistance level again? What do you think? What are some of the factors you're going to be looking out for that could actually catalyze them to go to break that?
I think the story for this year was the GDP slowing down, inflation being higher. So when we see something change next year with that regard, that could probably be a catalyst. But as of this point in time, we just have local buying. We need foreign investors to see something that's so compelling in our markets to make them buy us. But without any change in that regard, which I think inflation might be better a few months down the line because oil is low and the dollar is also low, which I think will have a ripple effect on how people will spend as prices will go lower as well. So I think that's a net positive, but we really have to see something drastic and compelling to cause people to at least invest at a certain level that they would see it. They're willing to buy it at a higher pace.
Well, one of the things that people cite as being more important now than it has before is earnings growth on the PSE. They've always gotten a bit of slack from analysts before because they cite the growth story, the economic fundamentals. But now it seems people are putting more and more emphasis on earnings. Given that, can you give us your impression of third quarter earnings? How do you think we did? Do you think it's been enough so far? Given the third quarter report cards, to perhaps justify a comeback into the PSE?
You have a bit of companies who outperformed, but the far majority, the average, are still to put it nicely, they're not as compelling. Also, they're consistent. Some of them are well in line to what's expected, but I don't think it's enough to let people to at least compel them to actually win in a short-term scenario. So this market is for people who want to buy cheaper stocks with them thinking 2-3 years down the line when something compelling comes in.
Okay, so let's talk about some of these underwhelming sectors that you said still leave a lot to be desired. What are some of these sectors that you think might have not performed to expectations or perhaps didn't impress investors?
Okay, for one, if you look at some consumption stocks, there are winners there and there are losers.
Okay.
It's split. If you look at the banking stocks, also there were some that got a lot of Q3 results.
Time out. Let's go to the consumer sector. Okay. What's the split? Who won and who lost?
Okay, if you look at Jollibee, I like the Jollibee. I like the Maxes. If you go to the other side of the spectrum, you look at the MRSGIs, you look at 7-Eleven, you've seen growth that's okay, but not as compelling as what everyone else wants.
So what do you think? And this is something I've asked a handful of our guests before. What do you think is the reason why the likes of Jollibee and Maxis? Why do you think they've done so well and the likes of 7-Eleven, Mrs. G have not? Is it just the fried chicken, or is there something else that these two companies are doing different from the other consumers?
People fail to see when it comes to stocks. We're not anymore in a scenario where everyone is bullish about the economy. So to win in this scenario, it has to be picking individual stocks. So it's really just because I think from a company perspective, these companies have a better story, better track record. That even look at Jollibee. Jollibee hasn't dropped below 240, 242 when some below 240, 242, which is where a good solid support is over the past few months. When a lot of the stocks have been battered down. Max, on the other hand, has been battered down. This could be probably a turnaround story for them, not now, but somehow later on, if they continue to be more. I think they produce more compelling results for them moving forward. But it will come back to which is a better brand, which will produce better and consistent earnings, not just now, but earnings repeatedly over the next few months.
Okay, now let's focus in on some other disappointing stocks over the last couple. And one of the disappointing main index heavyweights was DMCI. We actually saw that stock actually, with our quarter of profits come down, mainly dragged down by Semirara. Actually, arguably that Semirara was the only reason it was dragged down, but it dragged it down significantly nonetheless. Can you give us your outlook based on the charts at the moment for DMCI? It doesn't seem that they're hinting at a massive recovery in the fourth quarter either.
What's good about that though, from a chart perspective, is it's already above the 200-day moving average. It's MACD is also above zero, denoting that bulls are starting to shift. It may show us that momentum is not there yet, but for those who would want to position at this point in time, it's already telling us that it probably has stopped falling. It's building a steady base at around 12. So for people who would want to accumulate at those levels, as long as 12 will hold, they could continue buying DMCI. Another thing about that is I haven't been really been a big fan of mining. So Semirara, as amazing as the company is, it would give you unpredictable results, and that's what's resulting also for DMCI. But at the end of the day, if its property development arm will continue to outperform and its construction will continue to do well, I think this still has a tremendous upside, and the chart is also confirming it, albeit it doesn't have a strong upward push right now.
So, I mean, there is upside, it seems, based on the technicals. But how much upside do you think that is, Marvin? I mean, can you tell us how good it might get for DMCI should it start to recover as some are hoping?
Okay. I'm comparing it from a lot of the stocks that we have in the market right now. Majority of the stocks that are there, at least the ones that are relatively active, are way below the 200-day moving average. You just have a few select stocks that are above the 200-day moving average. So it's an option up against the lack of more bullish stocks out there. This could still go up. You see that there's a resistance up around here at around 15 pesos per share. You also have one somewhere here close to 14. So if it stays above 12, it could well challenge those resistance levels. And even if you look at the MACD, it's above zero. The trend is up. There's no sign yet that it's headed down, but also there's no sign that there will be a large push upwards. So I'd peg 14 and 15 as some resistance level as long as 12 will hold.
So possible for them to wipe out those year-to-date losses. Let's go from them to another stock that did well in the third quarter, but has seen a lot of headwinds in the last couple of quarters. We're talking about Mega World here, and I think the big question really is, it was just earlier this year when they finally broke through 5 pesos a share. That's something everyone was hoping for, and they've fallen below that. It seems to be forming a resistance at that particular level. What are the odds we might see the good old days of 5 pesos and above for Mega World based on what you're seeing?
From a chart perspective, the range was really moving from 4 to 5. Then you have a mid resistance at 4.5. So the play there would be a breakout from 4.5 would allow the stock to now challenge the 5 peso level. So the way traders and investors could look at is if 4.5 does not hold, there's a chance that it retraces back to 4, but that would be a buying opportunity for them to buy at 4 and then set the target at 5. So now it's above 4.5. I really believe that its progression could bring it to the 5 peso level just from a technical analysis standpoint, and just because the quarter earnings reports, I guess, gives them some sort of fuel to give buyers, I guess, a stronger buying sentiment in a lack of catalyst in a lot of the stocks that we have.
Now, the thing is, too, I mean, they've had solid earnings pretty much every quarter for the last 3 or 4 years, but it seems that the price only broke through 5 pesos a share for a couple of months before coming back down. Is 5 pesos the max valuation for this company, though, per share?
When you look at technicals, price discounts everything. The market is dictating at this point in time that somewhere around 4.5, 4.6, 4.7, that's where it's fairly valued. So I think you need to eliminate all of the sellers first at 5, those who bought early on that haven't really sold yet. Or there must be something really compelling. You have to remember, Ayala Land is growing at a much faster rate, not just per quarter, but on a year-to-year basis. So for property investors, it's a choice between what do I buy now? Even if you look at Ayala Land and Vista Land's PE ratios, their PE ratios are relatively cheaper as well. So there's I guess the thing about property stocks is there's a lot of choices out there, a lot of choices with good companies that are growing, that are cheap. So MegaWorld's not the only company also producing. So when it hits 5, there might be other compelling options for people as well.
And finally, Marvin, before you go, very quickly, I'm sure you've noticed what you've been taking note of what's been happening to the telco space. All of these stocks that have been moving and losing ground after Mr. Telco's name is the third telco. If you see at the board right now, you're seeing the likes of Globe Telecom down. You're seeing the likes also of Vulcan, which also is taking on losses after that. Given all of the speculation, all of these crazy moves we've seen over the last 12 months, can you tell us what do you think we've learned, given the saga of all the speculative moves in the telco space leading up to the selection of Mr.
Okay, I classify
and what kind
them,
of advice can you give advisors? I mean, investors, given
I classify them into 3. I put Globe in one category, PLDT in one category, then everyone else who just moved up prior to the announcement, who just moved up based on news, based on speculation, based on everyone guessing who could it possibly be. So the problem with this side is that if news does not turn out to how they want it to be, they have no value, they have no earnings, it just moved up based on price and speculation, those would hit very, very large drops. PLDT, on the other hand, if you look at it, and we've been talking about this over the past few months, earnings really, it's not as compelling also as compared to where Globe is. So Globe, though, is a different story. For me, the drop that it had after the announcement brought it back to the strong 200-day moving average at around 1.7, 1.8, which for me, as long as it stays above that level, will still make it compelling enough to buy. And the fundamentals for the companies there, for me, Globe is not just anymore a telecom company. It's a data company, a media company, and it's doing fintech. So the revenue for Globe will still be amazing, even though in terms of the news that there's a third player, it's hitting them right now. But at the end of the day, it will go back who among all of them have earnings, and the ones that have earnings will win.
So Globe still the better pick of Marvin Germo from StockSmarts amidst this crazy telco space, which is moving like very unpredictably in the last couple of months. Thanks for joining us this morning, Marvin.
Always.
And giving us your thoughts on the final trading day of the week.
Well, time now to pause for a quick break. And right after that, Davao businessman